our approach is unique. It's the Pear way, right? And we have a culture and approach of working with companies that we really believe in.
In this episode of Next Unicorn Podcast, I talk with Ajay Kamat, the head of PearX, one of the top startup accelerator programs in the San Francisco Bay Area. Pear has been an early investor in many successful startup companies, including DoorDash, Gusto, Guardant Health, SentiBio, Branch, Viz.ai, Aurora Solar, many others. In this interview, we talk about the PearX method of startup success. We not only talk about how PearX selects startups to be part of their programs, but also how the team at PearX helps startups to avoid common mistakes, find product market fit, land their first hires, find seed investment from VC firms, and ultimately scale quickly into successful unicorn companies. Later in the interview, I also talked with Ajay about his personal career background, his time as a founder, and what led him to become the head of PearX. Also, stick around to the end because Ajay participates in the Next Unicorn bonus round. Very briefly, what is Pear VC and what is PearX, and what is the difference between the two?
Yeah, good question. So Pear VC is a pre-seed and seed stage venture capital firm. It's a 10-year-old firm. We're investing out of our fourth fund, which is a $432 million fund. Our goal is to provide institutional support at the pre-seed and seed stage and be the best partner for companies that are getting off the ground. So we do two things fundamentally. We do pre-seed investing, which is checks that are $250K to $2 million, and we do seed investing, which is checks $2 million to $6 million. I run PearX, which is our pre-seed accelerator. And so what we do for all of our pre-seed investments, all of them go through PearX, which is a program that we run twice per year for 14 weeks, where we provide capital, hands-on support, and really help companies get off the ground to find product market fit and raise additional capital.
And just briefly, how is PearX different than other startup accelerators?
So PearX is our way at Pear of doing pre-seed investing. And so what we really like to do is provide hands-on support to help companies that are just getting started. So how do we do that? We provide several pillars of support. The first thing that we do is we actually pick a very small number of companies, so very small batches, about 20 companies per batch. That allows us to provide, really personalized support to each company. We pair each company with a partner who we have 10 partners on our team, most of whom have been founders who have started and sold companies themselves. And each company is paired with a partner who is a specialist in the vertical that the company is working in. So we work hands-on with the company to solve the biggest issues and find product market fit. The second thing that we do is we provide hiring support. So my partner, Nate, who's our in-house recruiter specifically for PearX, will help you find your co-founder, help you find your first engineer, help you find your first product designer, whatever it is that you need. We help you write the JD. We help source the candidates. We interview the candidates, help you find comp information, and help you close them. On average, Nate is actually hired 2 people per company. And these are companies that are already one or two, they're only 1 or 2 people large when we invest in them. So we're doubling the size of the company, and it's really fundamentally supportive to companies at this stage. The third thing that we do is we provide go-to-market support. So we have 2 partners, Anna and Pepe. They specifically focus on how to get your company off the ground, how to get the first contracts, how to get your first pilots in place, and really find your first customers. And they provide customized one-on-one support with each company in PearX. The fourth thing that we do is we have a very strong community. And that community is supported by our office space. So we have a 30,000 square foot space in San Francisco. We call it Pear Studio. It's beautiful. And with capital from PearX and being in the program, you get free office space during the duration of the program. It's an incredible way to work in person with your team. You work side by side with other incredible founders who are building companies, and the Pear team is there as well. So we get everyone together and we're really supportive, and it helps push companies forward. The fourth thing that we do is we have a big demo day. It's a live demo day in person. Thousands of investors come, and it's an opportunity for companies to pitch their ideas and raise additional capital. And it's actually very successful. Between 85 and 90% of companies that pitch at Demo Day go on to raise institutional capital. We support by helping them, practice the pitch and come up with the right venture story. But we do other things on the back end as well. I make sure that, I see it as my job. I'm responsible for making sure the companies get funded. So I'm back channeling with investors. I'm helping companies negotiate and respond to investors to make sure they're saying the right things, and we help them close successful rounds. The other thing that we do that's really fun is at the kickoff of every Pair X, we have a thing called Camp Pair. So we take everyone, to the coast or to the mountains. We stay in tents. We have incredible speakers like a co-founder of DoorDash or a board member of Instacart, and we go through a bunch of topics and community building activities to really get to know one another. It's really fun. It's a great way to kick off the whole program and get the community started.
So before we talk about the Pair X method of startup success, let's just briefly talk about how you select startups and startup teams to participate in the program. What do you look for in startups?
Yes, it's very difficult, right? Because at the stage that we're investing, frequently it's one or two people and an idea. And, sometimes we meet a company and they pitch us, and then a few days later they email us saying, actually, we've changed the idea. We're working on something else altogether. So what we found actually is at this stage, a lot of what we're doing is picking people. We, of course, look at the ideas in the markets, but we're thinking about these founders. Are they going to be able to take the companies all the way? Are they going to be able to find product market fit? Are they going to have, are they the types of founders that other people will want to work for? These are the types of things that we're looking for. And it's very subtle. It's a little bit art. It's a little bit science. But, when I meet a founder, even at the very earliest stages, even if they haven't written a line of code yet, I'm really looking for, do they have a customer insight? Do they understand something about the market that isn't obvious? And if we can see some of those signs, it's a good indication this is a company that we should pursue.
So it sounds like it boils down at this stage more to teams and the startup founders rather than individual startup ideas. Can you dig a little deeper into how you think about startup teams and how you evaluate and select startup teams?
Evaluating teams, it's difficult, and also, we're meeting thousands of companies, so it's something of a challenge to figure out, who are the types of founders we want to work with. But we are looking for a few things. The first is, do teams understand the market that they're in? And one way that we can understand this is, have they worked in that space before? Or have they researched it in depth? Have they talked to a bunch of customers? And do they have a key insight? The second thing that we look for is, can this team build? It's one thing to just understand a market. Are they going to be able to build a product that's world-class and is going to be able to service their customers? And how quickly are they going to be able to do that? Or is that something that we're going to need to hire in? And on that point, is this a team that we think other people are going to want to work for? Because, of course, at the earliest stages, founders need to recruit really high quality talent with very little resources. You don't have a brand, you don't have capital, or you have very little capital. And so we're looking for people who can sell themselves, sell the vision, and have very strong clarity of thought. And it really sums up to being like special people, right? Founders who go above and beyond. We say, the way we talk about it is like, this founder is going to walk through walls to make this company happen. If we can get that sense, even if it's very early, again, it's a good candidate for someone that we would want to work with.
And how about the geographic location of the teams and their sort of geographic market focus? Is this limited to only US founders or founders wanting to be in the San Francisco Bay Area for the next year plus, or are you looking and interviewing international teams, potentially even addressing international markets?
We're definitely open to it. I think we find that the vast majority of the companies that we invest in are building products for the US market, though that's not exclusively. We have companies in Latin America and Europe and Asia, but in order for us to invest outside of the US is obviously the market that we understand the best. So if we're going to invest outside the US, we need to know that the founders understand the market that they're in exceptionally well. And sometimes we partner with local investors on the ground as well. But we do actually ask that all companies come to San Francisco, work out of our office during the program, because at the stage that we operate in, we found it's the most effective to really be in the same room and hash out the biggest problems in person. And so we found that to be effective, and that's what we ask of companies.
What stage would you say exactly are the startups that you're working with that come into the program, and what stage is that program most effective for them? I know you're in that 0 to 1, but sort of like if you could dig a little deeper on exactly where they're at that is most effective for getting your help with.
Yeah, absolutely. So as a reminder, we invest between $250K and $2 million in each company. So really what you're looking at is the range is some companies are 1 or 2 people in an idea, and some companies have a product in market with some early traction. In all cases, what we're trying to do is we're trying to help companies get the fundamentals right so they can start building and scaling their companies. And so, everything prior to seed, we actually think there's a range, but everything prior to seed is really where we operate. And frequently, as I mentioned, companies change their ideas, and other times people in the programs are starting to actually scale their business and are preparing to raise very large seeds or even perhaps almost Series A's.
So it could really just arrange depending on the individual company.
They are. I mean, I would say on average it's quite early, but across all the companies, we're looking to get the same things together. We're the fundamentals, meaning, do we have a market that's venture fundable? Do we have a minimum viable team in place? Do we have a minimum viable product in place with early customer traction? Do we have the pricing right? Do we understand what it takes to get the companies off the ground in terms of go-to-market? All of that is the same across all companies, but different companies are at different kind of stages in their development on each one of those.
So they wouldn't necessarily have a minimum viable product yet?
It's not a requirement that they have a product yet. Many times they build that during the program.
All right, I want to move on and talk about the PearX method of startup success and what you and your team do to help these early stage startups get pointed in the right direction, and so they have the best chance of eventually becoming the next unicorn companies. What would you say is the PearX method of startup success, and how is it unique?
The first thing that I'd say is we provide customized support to each company. So we look at exactly what's going on, what are the strengths and weaknesses, and then we really try to build in the areas that they need the most support. The framework that we use, 0 to 1, it's really common. It's a common refrain in startup land. What we've done is we've actually broken that down into 2 distinct phases. That's 0 to 0.5 and 0.5 to 1. So at 0 to 0.5, what we're really looking to do is build a product that gets a few customers to really love it, something that they can't live without, they can't do their work without. And that requires, plenty of iteration, customer development, product development. And then the second phase is 0.5 to 1. And that is really building a growth engine that scales. So by splitting it up into these 2 distinct phases, what we're able to do is to get really specific on the type of work that we need to do. The way that we're able to help these companies at the 0 to 0.5 stage is really what we found is that many founders are first timers. And so it's the first time they're interviewing customers and doing customer development. It's the first time they're selling themselves and trying to hire their first hire. And so when it's your first time, sometimes there's some calibration that's necessary. So for example, I'll give a great example. We ask companies to do customer development and to really understand their customer problem. And there'll be some teams that come back after their first week and say, hey, yeah, we talked to 3 customers, here's what we learned. And then there's other companies that come and say, hey, we've spoken with 30 customers and this is what we've learned. And sometimes we need to help educate teams and say, actually, the volume that you need to speak with is much higher than you think, and the pacing at which you're working needs to be much faster. And just helping people recognize that is an unlock for them, and we start seeing people making very quick progress.
What do you think is the scale and volume and speed that you need to do these kind of pre-customer interviews or potential customer interviews?
So you need to do enough customer interviews where, when you're talking to the next customer, you can predict what they're going to say. So in order to get to that level, generally you need to talk to dozens of customers per week is the rough framework. If you're talking to one or two, you could be hearing just one-off anecdotes. But if you're talking to 20 or 30, you can, the 31st company you talk to, if you can predict what they're going to say, then you really have a sense of the problem space and the customers.
In terms of helping startups get off the ground and get their minimum viable product in these very early stages, what's the sort of difference in how you help with a B2B startup selling to other businesses versus a B2C startup selling to everyday consumers?
So the first thing I'd say is our support is not one size fits all. So for example, I lean more on the consumer side given my experience as a founder and as an investor. And we have partners on the team that focus more on the B2B and enterprise space. But what I'd say is at the earliest stages, on the consumer side, what we're really looking for is deep customer insights and customer validation and very quick product iteration. So what you really need to be able to do is test many hypotheses very, very quickly and look at the resulting data. And you're able to do that in consumer because, you can get a product in front of 20 or 30 people, and if they hate it, it's okay because there's another 20 or 30 people that you can find tomorrow. And so we're looking kind of for these quick iterations until you get signal that there's something very interesting and people really love the product. On the B2B side, it's a little bit different. You're looking for a few big logos pretty quickly. And the process to doing that is there's a long sales cycle. You need to show the product. You need to go through the sales cycle. You need to show the product. You need to get a pilot going. And so we help with, how do you structure that pilot? Are you talking to the right types of customers? How long should the pilot be? Should it be paid or unpaid? What type of contract should you have? What happens at the end of that pilot period? And how do you get them to close with a long-term contract? So it's a different kind of muscle, but if we can get a couple of those logos in pilot form in the early days of a company and get one or two of them to convert to real contracts, we're really on our way to getting the company off the ground.
What does PearX do to help startups get product market fit?
Finding product market fit, it's hard, right? It's every company needs to do it. It's the founder's responsibility to do it. The way that we support is, first and foremost, we have partners on our team that specialize in various verticals, and almost everyone on our team has been a founder and has started and sold a company. So we've kind of been in the shoes of the founders that we work with, most typically in the areas that they've built in before. And so what we do is we just spend a lot of time with the companies, talking about the learnings, getting on the whiteboard and trying to understand and solve the biggest problems that the company is facing on a week-by-week basis. And lastly, it's calibration. What does product market fit actually look like? And for those of us who have built successful companies and gotten to scale, we know what it looks like and what it feels like. And we know what it doesn't look like and what it doesn't feel like. And sometimes that calibration is very helpful. I had a company in the last batch that we were really excited about the product, but after a handful of months of selling, they weren't getting anyone to bite. They weren't getting any pilots and anyone to try out the product. And after a certain point, I had to go to the founder and say, look, usually by this point, and after talking to this many customers, we would have gotten one or two to want to try it out. We're not seeing that. So I think there might be something else, something deeper that we need to figure out here. And so we started this process of exploration and going back to the drawing board on customer development. And sometimes companies need to hear that. And other times they need to hear, wow, the pull from the market here is incredible. We actually see this very, very rarely. We should jump on this and run as fast as we possibly can.
I know you mentioned before to me that something like 40% of the startups that go through your programs pivot.
Yes.
Have a fairly major pivot. I'm sure that's pretty normal for just startups everywhere, early stage startups everywhere. How do you know when it's time to pivot and make sure you don't make that decision too soon or too late? And how do you go about making that decision or helping startups make that decision?
Yeah, it's true. Many times in the time that we funded a company and we've started the program, the company is working on something else altogether. It's very common. The reason that it happens is because founders are getting response from the market, right? They're talking to customers, they're trying to sell their product, and they're learning things very quickly. And many times they learn that I don't think the customer actually wants what I'm selling, but I'm hearing this other problem, and it's really interesting. And we started digging into that. And these cycles can happen very quickly. So the benefit of pivoting at the very earliest stages is you don't have a lot out there. So you don't have to like change your whole company and, communicate to like multiple stakeholders that this thing is changing, because you don't really have customers yet. So you can actually just change what you're working on in a very short period of time. And we're okay with that. In fact, we're very comfortable with, even if we have some customers and decide to pivot, that we talk through why that decision is a worthwhile decision, and we support companies through that transition. And so I would just say it's very common. Sometimes we bring it up to companies, but actually more frequently the companies are bringing it up to us and sharing their learnings and rationale for making the change.
Can you give us some examples of startups you've worked with in PearX that have had really dramatic pivots and gone on to be quite successful with that?
Yeah, it's countless. I mean, it's so many companies at every batch. A couple that come to mind is we have this company called Kale, which is a product that's growing extremely quickly right now, and it helps major brands connect with their fans and customers who are posting organic content about the brands, and for rewards and payment and things like that. But this company, when we funded them, they were two founders that came out of LinkedIn, and they were building this product that helped developers embed surveys onto their websites. It's like completely different. And somewhere through the program, a month in or something like that, we came to the conclusion that this isn't really that big of an opportunity, and customers are not that interested. So we have to go back to the drawing board and look at the concepts, look at a whole set of new concepts. And through that process, we actually iterated the entire program. Every week we were iterating to try to find what company to build. And on the last couple of weeks right before demo day, the team landed on this new idea and was able to very quickly raise a very substantial seed, because they had done the homework, they had done the research, they had very little product and code written, but the insight that they discovered was correct through the process that we ran them through, and they've been off to the races ever since. Another company is a company called Glide, which was a company that we funded while they were still students or just graduating school, and they were building kind of crypto Web3 consumer bank. And if you remember in that era where there were tons of crypto companies, this company just became another one in the long list of companies that was kind of doing something similar. So, after the program, they kind of realized, okay, this doesn't have legs, but they were still interested in financial institutions. And so what they did is they shifted to a company that provides back-end and front-end software for credit unions. And they've put their heads down selling to these, financial institutions, and they're getting incredible response from the market and growing very quickly. And crypto bank was this like cool hip thing, and now they're selling to like credit unions, which you wouldn't really describe as cool, but they're modernizing credit unions with their technology, and they're getting a really strong pull from the market.
What are some of the most successful startups that have come out of PearX? And what do you think has been responsible for that dramatic success?
Well, first of all, I want to say that, at Pear, we've had, many fantastic companies. We have DoorDash, Vanta, Gusto, Garden Health, Branch, Aurora Solar. PearX is a newer program, so a lot of our companies are younger, but a very high percentage of them actually are worth over $100 million and growing. So we have Affinity, which is a company that many people use, that was in an early batch of PearX. They were actually still students when we funded them. They were working out of our office. And we have a handful of really quickly growing companies like Kale. Learn to Win recently announced a $30 million fundraise, and they sell software to help the military train folks, and that's growing very quickly. We have Polymorphic, which is a constituent relationship management platform for governments. That company went through PearX when the founders were actually just still students. We actually met them in their dorm, and that company is growing very quickly. So there's a bunch of companies that I think are getting to scale at this point, and they're going to become household names in the next few years.
When you think back to them entering the program and some of the early moves they made along the way that you were involved with and witnessed, what do you think was responsible for the high growth of those startups versus some other ones?
I think the reason that these companies work is first and foremost kind of the fundamentals. And the first thing about fundamentals is, do they have an exceptional team? And you find that the companies that go through PearX have just incredibly strong founders with not only smarts, but grit and intuition and kind of their forces, right? They really are creating something out of nothing. I'll give you an example. And sometimes, we are involved in helping them find the path, but, they also discover these things and help the companies grow on their own. I'll give you an example of a company, Conduit, that I'm really excited about these days. 2 years ago, they went through PearX, and they were building a little hardware product that you clip on to residential AC units. And it was meant to predict when those AC units were going to fail, and then they were going to, sell those leads to HVAC contractors. And 2 weeks into the program, these are 2 business school students. I kind of went to the team and I said, look, guys, you're great, but you have no business building this hardware, product. You have no idea. You've never done anything in hardware. This doesn't really make sense. So they went back to the drawing board and they realized that the problem space that they're in actually was interesting. The approach wasn't quite right. So they built a software that allows HVAC contractors, helps them sell, and they do this 3D scan of every home. It produces a report that helps the customers understand what type of HVAC replacement they need. And this company now is growing incredibly quickly. So the team had the desire to work in this space. They had the insight about what the customers needed, the HVAC contractors. They really wanted to sell and get more clients. The approach wasn't quite right, but because they had that North Star of helping this type of customer and the reason that they were doing it, they were able to find a path that really started working and started scaling. So we kind of help them, pick a lane and make sure that they're going in the right direction, but they were able to take it from there on their own, and they're growing extremely quickly.
How would you say the PearX approach has changed over time?
To be honest, the PearX approach started very organically, right? We had an office in Palo Alto across the street from Stanford, and we were saying, hey, why don't we fund some people who are students or graduating school and let them work out of our office? And so we did that. And then the summer came around and they said, hey, we want to keep working on our companies over the summer. Can we continue staying at your office, and maybe can you give us a little bit of capital? And that's how it started. And so for many years, we kind of just did it part-time. Every summer, we'd get a bunch of companies in, they'd work out of our office, we'd help them. And then we started looking at the results of these companies. We had Affinity, we had Viz AI, we had some of these companies starting to grow very, very quickly. And we realized maybe there's something here. So 3 or 4 years ago, we decided to take it really seriously. We started putting people full-time on PearX. We ran the program 2 times per year. We have a very kind of dedicated system of support and services that we provide. So we're investing a lot of money and time and effort into the program to make sure that we can really support the company. So now it's really a full-fledged thing, and we're putting a lot of effort into it. But it kind of just came out of this desire that we heard from companies about what they wanted from us. And we've just doubled down on that.
Do you see any changes in the types of startup teams that you think will be successful in this new era of AI?
Obviously there's trends in the market, and AI is super hot right now. For example, I think almost every company in this upcoming summer batch is either AI or utilizing AI in some form, AI infrastructure. I would say we tend not to try to predict the future ourselves too much. Obviously, we have themes and theses in a variety of areas, but our approach is to let founders lead and share kind of what their vision of the future is, and we kind of buy into that. And we try really hard not to just go with whatever the trend is at that time, but you do tend to see different types of companies coming up at various times because of the technology breakthroughs that are out there. It's super clear that AI is here. It's going to make a huge difference in every single industry. I do feel like we have the benefit of seeing the future a little bit when we meet these companies and hear what they're building. It's an incredibly exciting time. And so I think we're going to see a lot of very, very cool companies coming out in this next cycle. And I think it's going to benefit all of us.
Do you think in terms of AI companies, I think a lot of people have the impression that the big players are sort of dominating these larger, large language models. What kind of opportunities are the startups you're seeing recognizing or targeting in that space that are more open to startup disruption?
Yeah, I think for sure the big tech incumbents have an advantage in a variety of ways. They have distribution to many customers, and they are able to provide this very cool technology very quickly to many people. I think the companies that are, at the very early days, I mean, it hasn't even been that long, but in the very early days of being able to build with LLMs, you saw lots of companies that were kind of thin wrappers, right? So they just provided basically, what ChatGPT provides, but they, would put it for a specific vertical. Obviously, that's not going to cut it. What the types of companies that we're seeing right now are companies that either focus on the infrastructural layer. So if you're a developer that wants to implement AI into your business, and particularly in the enterprise, there's a whole host of challenges. And so we have companies that are building the infrastructure to allow developers to actually successfully implement this technology into their products. The other side of the companies that we're seeing are companies that are actually rethinking workflows altogether. So every industry, from real estate to any type of industry that we see, has the work that they do can be dramatically improved with AI. But the question is, how do they do their work, right? And so we have companies that are building full workflow solutions that are from, for example, for a real estate agent, from the moment a lead comes in to the moment a home sale closes, that entire process can be improved 10x today with the technology that's out there. And so we have companies that are rethinking the way that these industries are going to work. And I think that's a very exciting opportunity as well.
What do you think are some of the most common mistakes that you see early stage startups make, and what can founders do to avoid those?
So many mistakes, countless mistakes. When you're a first-time founder, you make every mistake under the sun. When you're a second-time founder, you don't make the same mistakes the first time that you did the first time around, but you make a new set of mistakes. So I think mistakes are fine. It's the process of learning, and every founder and every company needs to learn to become excellent. There are some common themes, of course. Picking the right co-founders, right? We see so many co-founder related issues, and that's at the foundation of a company. If you get that wrong, the company is not going to be successful. Hiring mistakes. So, it can take too long to hire people into the company, and when you have a pre-seed investment, you don't have that much time, and you don't. If you can't get good people in the door quickly enough, you won't have enough time to iterate, or you won't be able to iterate quickly enough, and so that can kill companies. We see, again, as I mentioned, specifically for first timers, everything that you're doing is for the first time. So you're selling your company, yourself, for the first time when you're trying to hire people, and you might be selling yourself short because you don't really believe that you can get people of a certain caliber. But in order to be a company that's really successful, you need to outperform everyone else. That means you need to be able to hire people that the average company shouldn't be able to. And how do you do that, right? And I think that there's a process of learning and education that companies need to go through to make that happen. And then, after that, you're not building quickly. I think speed is a huge factor in company success. And we see sometimes companies, they're just moving too slowly. Things are not happening. And other companies, things are moving, things are happening. And those are the ones typically where even if you're building the wrong thing, they figure it out quickly because of their pacing and their expectations are very high of themselves. How do you get your first customer? How do you actually close that customer for long contracts? All of this stuff are areas where founders can make mistakes and typically do make mistakes. And then ideally you learn from them, and the second time around or the second customer you talk to, you figured it out and you get that sales cycle really tight and you're able to close customers and get the companies off the ground. But I mean, it's endless. I think that we really try to help companies avoid the mistakes that we've made as founders and avoid the mistakes that we see as investors. But the truth of it is, no matter how many times we tell a founder, like, this is a problem, this is a mistake that you're going to make, founders really need to learn that on their own. They need to internalize it intuitively. And if they can't internalize what we're saying, they're going to need to, they make the mistake on their own to learn it.
What do you think has made PearX one of the top startup accelerators in the San Francisco Bay Area and competitive with, slightly older startup accelerators like Y Combinator and Techstars and others?
So I really do think that all programs in the ecosystem are awesome and valuable in the world that we're in. It's a small startup community, and all the support to founders is welcome and great. Our approach is unique. It's the Pear way, right? And we have a culture and approach of working with companies that we really believe in. The first, of course, is that small batches, and this is an enabling tool. Having a small group of companies allows us to provide, a ton of support that they wouldn't be able to find in other places. The partners on our team being vertical experts, helping companies find product market fit in the verticals that they understand the best. The office space, being able to spend your first several months in an office working alongside other founders, and the caliber of the founders is very high. So you have this inbuilt community of exceptional people that are building. It provides the push and the support system that's helpful for companies at the earliest stages. The hiring support, we help you find your co-founder, and that's not just like, here's a couple leads. It's we help write the job description. We source candidates of certain profile types. We interview those candidates. I think in the last batch, my recruiting partner Nate in PearX, he averaged 2 hires per company. These are pre-seed companies, so we're like doubling the size of these companies for free. In PearX. Go-to-market support. In the first time that you are talking to a big customer, how should you prepare for them? Should you just go in with a demo? Should you create a slide deck? How do you make it seem like you're a bigger company than you are? That you're bigger than 2 people with maybe $500K in the bank, and convince a big company to sell to you. All of that requires, in our opinion, hands-on and customized support. And frequently, our partners will join the meeting, right? Our go-to-market partner, Anna, has joined the meetings with the customers, to support and help listen and help sell, so that we can go back after the meeting and say, what went well? What did we hear? What were we hearing between the lines of what they're saying? What should the next step be? How should we structure the contract for what they're looking for? How do we avoid doing, customized product development for this big customer and make it something that's actually scalable? All of these kind of like little things make a huge difference in the companies, coming out of the program as they raise seed and Series A. And that foundational support is really what we focus on and why we think we're unique.
Awesome. Before we move on to some personal questions and the bonus round, is there anything else you want to say about Pear VC, PearX, the sort of Pear method of startup success, or the best way people can submit a successful PearX application if they're interested in that?
Yeah. At Pear, we are pre-seed and seed stage specialists. So we're a generalist firm. We have specialized investors that focus on various verticals, and everything that we do is focused on supporting companies at the pre-seed and seed stage. And that means that we are able to provide customized and specialized support at this stage specifically. So for companies that are looking to raise capital and their first institutional capital, we think there's no better place and no better partner to help you get your company off the ground and then from seed to Series A, which is really where we specialize. And specifically, outside of PearX, we invest in seed. So if you're raising $2 to $6 million, we do $2 to $6 million checks in seed rounds. And, we join as long-term partners to the companies. We specialize in getting the companies to top Series A firms. We go through a Series A boot camp to prepare companies to do that. So there's this whole world at Pear, in pre-seed to seed with PearX and seed to Series A with our traditional seed investing, where we really focus and we really specialize. So we have, again, partners in healthcare, biotech, SaaS, AI, and they're really experts in their areas. And everyone has been a founder who started and sold a company.
Tell me a little about your personal and career journey. So how did you get to where you are today?
It's so random, I think, to be honest. I was studying bioengineering, and my goal was to work in biotech. And I grew up in Silicon Valley, and I was surrounded by high-tech companies. And I achieved my goal of, getting the best internships in the biotech world. And, 1 or 2 summers in, I realized, wow, I really don't want to wear a lab coat pipetting all day and every day. And I kind of went home and I was like, what am I going to do with my life? And I had to figure out, I realized that what was happening at the time was internet companies were exploding. And it was such a fun, exciting time. And I had to figure out how to get into it. I just had to. And so I looked at my resume. It was all these biotech companies. I was never going to get a job at any tech company like my counterparts who had studied computer science. So I realized I had to make a job for myself. And the only way to do that was to start a company. And so I started, by the way, and I had no skills in terms of starting a company. I didn't know how to write any code. I hadn't designed any products before. So I started a very long multi-year journey to figure that out. And, I lived in my parents' house, and I got a small team together, and we started building and launching these products. And the first ones really sucked. But over time, we got better and better and better. And we tried, and we learned, and we figured out, we iterated very quickly, and we figured out how to be incredible product builders. And that was the moment where kind of luck started happening for me, right? And the biggest thing that happened is I had this company, I had my product out there, and it started growing. It was our 5th, 6th product that we had launched, the first one that started growing. And I there was a startup event going on in downtown Palo Alto. I wore my company t-shirt, and I was walking down the street, and this guy comes up to me and he asked me, what is that t-shirt? What is that company? And, on the back of the t-shirt, it said twitter.com/wedding. And, he wanted to know, how did you get that Twitter handle, wedding? That's really interesting. And this ended up being Pejman, who was one of our founders and managing director of Pear. And at the time, he was just an angel investor. And, that started a conversation. And 2 weeks later, he became my first angel investor. And, a year or 2 later, when he and Mar started Pear invested in my company. They were on my board, and I've been working with them for over a decade. And it's just kind of, I had this determination to build and to do something, and that created, and being fortunate to be in Silicon Valley in the Bay Area created serendipity and really changed my life.
And then you went from being a founder to being the head of PearX.
Yes.
How did that go about?
Yeah, we ran our company for 5 years. We ultimately sold it to Instacart. After the acquisition, I'd been a founder for so many years. I just didn't know what I wanted to do with my life. And so I called Pejman and Mar, who were my investors, and they were so supportive to me through the ups and downs of the startup world. And I just told them, I don't know what I'm doing with my life. I'm lost. And they said, no problem. Just come sit at our office. Do whatever you want. If you want to start a company, start a company. If you want to help out with other companies, do whatever you feel like. And so that kind of started this process where, for those who have like kind of come to Pear, you realize you get like sucked into the vortex of Pear. It's like a very fast-paced place. I started meeting companies and supporting, and eventually they asked me to come join as a partner on the team. I was one of the first partners to join. It was just a 3 or 4 person company at the time. And it's been almost 9 years since, and the firm has grown tremendously. We were just in our first fund at that point. We've now raised 4 funds and several expansion funds. The team is now close to 30 people strong. And so it's been an incredible roller coaster. And through that time, I've kind of done everything at Pear, all different, I've worked in consumer and fintech, digital health, all different verticals. I've worked at companies at the very earliest stages through the pre-seed programming, and later stage companies on boards of companies that are further along. And somewhere along the line, I realized that the thing that I loved the most and where I could be the most helpful is at the earliest stages. It's not glamorous, it's like, what company should we build? How do we get our first product out the door? How do we get our first customers? And that was an area that I found very fulfilling. I think that I'm good at supporting companies at that stage. I think I understand the challenge of that stage very well and very intuitively through my experience as a founder. And so I kind of raised my hand and said, I want to do this. Let's go continue to build PearX and support companies.
Was there anything unexpected about your career journey?
Yeah, I mean, so much of it. I think despite growing up in Silicon Valley, I really felt like an outsider. In the early days of working on startups, I was just so timid about it because I didn't actually think that I had many skills. And then I grew my skill base. And at the point, when I met Pejman walking down the street, I felt confident. I knew what to do. I knew how to do it. I mean, maybe it's not unexpected, but it's just that process of learning, I realized, is something that everyone can go through. You just have to put your head down and sacrifice and build and better yourself. And if you do that, the opportunity is available. And that lesson is something that it's a lesson in my career, but it's also a lesson in life. And after I learned that lesson, I apply that to everything, which is I may not be the expert or I may not be the smartest person in the room, but I know that if I put my head down and really work at it harder than anyone else, I can actually become one of the best people at that. And I apply that to everything these days.
All right. Are you ready to move on to the bonus round?
Sure. Let's do it.
What really drives and motivates you?
I want to be part of creating the future. And that's because I have come to realize that I'm an optimist. I really believe in the future. And so in believing in the future, it creates like all these fun opportunities. That mindset creates the opportunity to say, hey, I can actually impact the future. And in my opinion, the way that I do that is to be the best version of myself. Because if I'm the best version of myself, I will have the opportunities to participate in the building of the next generation of companies and the future that we all live in. So what motivates me is actually just impressing myself. Do I think I'm the best version of myself? Where are areas that I can actually improve? Where are areas that I continue to be weak? Or what are things that have held me back, mental models that have held me back for my whole life? How can I address them? If I can do those things, I can be the best version of myself and have a seat at the table to continue to build and to continue to support companies that are changing the way that we live. And that's really what excites me. The second piece of that is I want to do good and have fun. So it's important to me that I'm enjoying the work that I'm doing and that I believe that there's purpose and it's helping things move in the right direction. If those things align, it's what gets me up in the morning.
I was just going to ask you what excites and inspires you. I think you already kind of started to talk about that.
So that's kind of what motivates me. I think what excites and inspires me, hands down, is the founders that we work with. It's an incredible privilege to be able to work with brilliant, passionate people every single day. I mean, through the last batch of applications, I met with thousands of companies for PearX. Every single one of those founders is putting themselves out there, is trying to build something from nothing. And that is incredibly inspiring. And I believe it's one of the highest callings. It's not, there's other things that I think are very important in life, in the world, but it's one of the best things to be able to say, I'm going to build something and start from nothing and try to create. It really inspires me every day.
What's something about you that most people wouldn't expect?
I think I'm a very private person, so I don't know what people would expect out of me. One thing that I think is interesting is that in my senior year of college, in my major, I was the worst or the second worst student in my class. And I think that that's funny. It wasn't funny at the time. It's because, in my defense, what I was doing that year is trying to build companies. I spent every waking minute in my, apartment with my roommate talking about ideas, trying to build products, really studying markets. And we had no idea what we were doing, but I found this passion that I had never felt before. And it wasn't in the last engineering class that I needed to get my, to graduate. It was, that's all I wanted to do. And so that resulted in, grades my parents aren't proud of, but I think it's a funny thing.
So I guess you knew by that point that you weren't enjoying being in a lab coat in a biosciences lab.
I would say this, I think that there were classes that I could do really well in, and there were classes that I just couldn't. And the difference I learned was the ones that I was most interested in, most passionate about. And that's, sometimes I tell my wife that and she's like, that's no excuse, but for me, when I'm passionate and I'm interested in something, I can put my whole self into it and I can really succeed. And it was actually that lesson that I learned at that point in my life in college, which I think is part of the point of college, to really figure out how you tick and how you work. And that's what I learned. And when I found that there was something that I was passionate about and it's building companies and that could be a job, that you can, create a life out of, I realized that's what I have to do.
Do you hold a view on something that most people don't agree with you about?
I think that the world would be a better place if everyone had some basic level of engineering education. And the reason that I feel that is because when you study engineering, you learn how to think. You learn how to look at a problem, break it down, and come up with solutions. And a lot of the problems that I see in the world, I think, are because people are not able to do that very clearly and not able to break down problems, not able to come up with solutions. And so, I don't know, I think liberal arts education is amazing, but I do wish that more people had the ability to have this underlying engineering education to support living a good life, productive life.
What's some advice you'd give your younger self?
You're smarter than you think you are. Lean into your strengths. You have them, you know what they are, lean into them, and avoid comparing yourself with others.
All right, last question. When you're gone from this earth, what would you like to be remembered for?
I don't need to be remembered by anyone outside of my family. I want my family to know me as a loving husband, father, brother, son. And if along the way I did good and had fun, that's plenty for me.
All right, awesome. Well, it's so great to have you on the program. I really appreciate your time.
Sasha, thanks so much. I really enjoyed it.